Hello everybody, welcome back to the channel. This is your host OG John here, and what I'm about to show you is the most violent reversal in precious metals this year. Silver just rocketed 22% from yesterday's low, $65 to $78. Spot silver hit $77.16 per ounce, up over 20% from recent low. Silver soars 22%, retakes 78. But here's what nobody's telling you. Bitcoin pumped $11,000 in the last 24 hours, reclaiming $70,000. $340 billion added to the crypto market today. Over $1 trillion added to the U.S. stock market in the last 2 hours, with NASDAQ and S&P 500 fully recovered from yesterday's sharp decline. Dow Jones up 950 points to new all-time high. This isn't just a silver bounce. This is a coordinated risk-on explosion across every asset class. And it's hiding the biggest crisis in precious metals history that's coming in exactly 21 days. Stay with me because what I'm about to reveal will blow your mind. Current prices as I'm recording. Silver Western spot, $78. Shanghai spot, $82. Quick note for new viewers. This channel has never and will never ask for money in any form. Anyone doing so using my name is a scam. This channel is founded on factual analysis, not repackaged hype that copycats are selling. If you're looking for hyped analysis, check out the copycats who will spin my words into whatever narrative fits their agenda. They'll tell you it's moon time when it's green and doom time when it's red, whichever keeps you clicking. My team covers both bullish and bearish factors with verified data because that's how real markets work. Truly hilarious watching them promise certainty in uncertain markets. I only operate under the handle OG John AG on both YouTube and X. Now let's get back to the analysis, because this isn't about predictions. It's about understanding price action and fundamentals. Silver went to $65 yesterday, the lowest point of this correction. Right now it's $78. That's around a 22% increase in 24 hours. You wouldn't notice it if you only follow mainstream headlines, but the reversal is violent, and it's happening across all risk assets simultaneously. Bitcoin is up 17%, pumped 10,000 from lows. ETH surged 18%, reclaimed 2,000 from lows of 1750. $550 million in shorts liquidated, over $304 billion added to crypto market in the last 20 hours. Russell 2000 up 3.1% today, adding nearly $100 billion to market cap, fully recovered from yesterday's dump, turned green on weekly. This shows investors allocating capital into higher risk assets, small caps reacting faster than large caps. Similar trend in crypto. Bitcoin dropped nearly 35% over the last 3 weeks, falling from 90,000 to around 60,000. But same period, Alt BTC pairs up roughly 11%, showing strength in higher beta assets even while Bitcoin was weak. The pattern is clear. Stocks, metals, crypto crash and recover every single day. Same pattern over and over, all of 2026. At some point, you stop calling it volatility and start calling it what it really is. Markets are manipulated, news is manipulated, history is manipulated, but you can't hide truth forever. Now here's the critical question. Did JP Morgan Metals chief call the bottom in silver? The Post notes, quote, "Corrections don't kill bull markets. Blind consensus does." Silver lease rate in London jumps to 6.1% for 1 month. That tells you everything about the recent crash. This was leverage and paper getting flushed, not collapse in physical demand. If supply were loose, professionals wouldn't be paying top dollar to borrow silver right now. 6.1% lease rate means physical is tight and getting tighter. Think about what that number means. Normal lease rates are 0.3 to 0.5%. 6.1% is more than 10 times normal. When you have to pay 6.1% annually just to borrow silver for 1 month, that's not a sign of abundant supply. That's a sign of extreme scarcity. Silver CEO index now at 106.35 and rising. Silver also remains in backwardation. What happens when silver price is artificially low? Physical disappears. COMEX open interest data provides major signal. Thursday, with gold making higher low versus Monday, total open interest in COMEX gold fell to just 400,952 contracts. That's the lowest daily total since December 14, 2018, down from high of 555,309 just 2 weeks ago. What does it mean? As specs trickle and then rush back in, open interest will expand again with price. While day-to-day price changes fluctuate, lows are very likely already in, and prices will generally trend higher in weeks ahead. China exchange silver stockpiles plummeting. Since 2020, approximately 6,600 tons of silver drained. That's 90% draw in 6 years, equivalent to 30% of annual global silver supply. Physical silver demand in China remains strong. SGE plus SHFE hold combined approximately 850 tons. after today's draw of approximately 73 tons. 11 more days like this and there is no silver left. Chinese buyers using low prices to stack silver. SHF-SGE silver vaults continue to drop to new low due to China being world's largest consumer of gold and silver. This situation may push global gold and silver into serious state of out of control. Let that sink in. 73 tons drained in a single day. 11 days at this pace and the vaults are empty. Zero. This is not gradual depletion. This is a run on the bank happening in real time. Iran geopolitical situation escalating. Iran refuses to end nuclear enrichment in talks with U.S. U.S. announces new oil sanctions on Iran moments after talks end. Iran refused to allow Trump to save face and come to deal. What comes next may be significant. Geopolitical risk premium returning to markets. That typically supports precious metals. If you're panicking in silver here, you're watching the wrong time frame. Drawing long-term regression trend on silver divided by U.S. M2 money supply from mid-1980s. Recent rally breached historical range. Current pullback may look big on daily time frame, but in long-term chart, it's merely retest of broken range until proven otherwise. Importantly, price hasn't even crossed 2011 extreme yet, and some are already writing silver off. Timing may vary, but there's a lot of steam left in this move. Perspective over noise. Common sense, which, by the way, is even rarer than silver. You didn't really think this would be straight up, did you? This is one of the biggest games in human history, and big games are never easy. But if you focus on fundamentals and apply common sense, pain becomes much easier to handle. Strength comes from understanding. Silver miners set to explode in 2026. Silver surged into triple digits recently, hitting over 120 before pulling back to around 70 now. But the real story? Miners have barely kept up so far. Historical leverage play. In 2002 to 2011 bull market, silver rose about 300%. Top silver miner Pan American Silver soared 1,500%. That's 5 times the metal's gain. Average silver miners typically deliver 3 times silver price move. What happened in 2025? Silver ripped higher, up massively. But silver miners like SIL ETF lagged badly, barely matching or even underperforming physical silver at times. Why? Analysts were still pricing in old $35 to $40 silver levels through the rear-view mirror. The 2026 turnaround trigger. Big miners start reporting earnings this month. Producers will show explosive cash flow. Example, a 10 million ounce per year producer making 1,200% more profit than earlier quarters with lower silver prices than at present. You can't ignore those numbers. Analysts will have to upgrade valuations fast. Gold miners, precedent. Gold climbed from $1,300 in 2019 to recent highs around $5,500. Many gold miners lagged initially but then ripped. Examples like Agnico Eagle from $40 to $300. Silver miners lag gold miners too, but catch-up phase is starting. Banks don't have infinite balance sheets to trade precious metals per Bloomberg. That's the structural constraint. They can't suppress price forever with unlimited paper. Balance sheet limits matter. When physical demand overwhelms paper supply, repricing happens. Now, the COMEX March crisis timeline. 21 days until 429 million ounces of demand meets 103 million ounces of supply. Breaking the COMEX. Analysis dives into data and breaks down exactly why COMEX silver market looks like it's about to break. If delivery rate matches January-February intensity, 50 to 70%, we're looking at demands for 200 to 300 million ounces standing for delivery against available inventory of 85 to 103 million ounces. Core problem as of February 5th, 2026, March 2026, open interest 429 million ounces, COMEX registered silver inventory 103.5 million ounces and falling, February 2026 delivery rate 98%, 18.72 million ounces delivered from 19.11 million ounces open interest, inventory drainage rate 785,000 ounces per day, January 2026 deliveries 49.4 million ounces, 7.27 times the 2024 level. If March 2026 sees even 25% of contracts stand for delivery, COMEX would need 107 million ounces, potentially more than will be available by first notice day, February 27th. If delivery rate matches January-February intensity, 50 to 70%, demands for 200 to 300 million ounces against 85 to 103 million available. Is the long-anticipated COMEX silver default only 3 weeks away? Think about the math. 429 million ounces in open interest, 103 million ounces registered and available. If 50% stand for delivery, that's 214.5 million ounces demanded, against 103 million available. The gap is 111.5 million ounces they can't deliver. But here's the honest risk assessment. History suggests there may be more downside ahead for Bitcoin. Every major Bitcoin bear market over the last 14 years has seen drawdowns of at least 75% from all-time highs, lows of 93% in 2011, 84% in 2015, 83% in 2018, 76% in 2022. Polynomial trend shows each successive bear market bottom getting shallower, but next projected trough still points to approximately 70%. Applying this to current drop, 70% drawdown would imply approximately 38,000 for Bitcoin this time. Silver-gold ratio tracking Bitcoin directionally. For silver-gold to stabilize and recover, pause or base building in Bitcoin crucial. As long as BTC remains under pressure, downside risk in silver-gold persists. Bitcoin is canary in coal mine for this risk-off move. So while silver bounced 22% from 65 to 78 and Bitcoin reclaimed 70,000 and risk returned violently today, Bitcoin technical structure suggests more volatility possible. This doesn't mean bottom isn't in. It means confirmation needed before calling all clear. Perspective on technicals. Mid-December, silver was at 65 with RSI near 80 and everyone bullish. Now we're back at 65, but RSI is 30 and sentiment is bearish. Identical price level, completely inverted psychology. Does this guarantee we've bottomed? No. Markets can stay oversold longer than expected, especially during deleveraging events. The 47% crash happened in 7 trading sessions, which shows how fast sentiment can shift. Violent moves down often lead to violent moves up, but the key word is often, not always. Gold's long-term parabolic structure remains intact, which suggests the broader precious metals bull isn't broken. But silver needs to hold current levels and build a base before we can confirm this as the low, rather than just a bounce within a larger correction. However, structural indicators point to exhaustion of selling pressure. COMEX gold open interest lowest since December 2018. Silver lease rate 6.1%. Backwardation continues. China vaults draining 73 tons single day. 11 days at this rate until empty. Registered COMEX silver 103 million versus 429 million exposure. 21 days until March 1st notice. February delivery rate 98%. These are not signs of abundant supply. These are signs of paper leverage flushing while physical tightens. 3 takeaways. Number 1. Silver rockets 22% from 65 low to 78. Bitcoin plus 11,000 reclaims 70,000. Crypto adds 340 billion today. US stocks add 1 trillion in 2 hours. Dow new all-time high. Russell 2000 plus 100 billion, fully recovered. Risk on return violent and fast. 550 million shorts liquidated. Crypto dip buying aggressive across all asset classes. But Bitcoin technical structure suggests 70% drawdown historically normal. Potentially 38,000 target. More volatility possible. Confirmation needed before calling bottom definitively. Number 2. Silver lease rate 6.1% says this was paper leverage flush, not physical demand collapse. Silver CEO 106. Backwardation continues. COMEX gold open interest lowest since December 2018. Spec longs will rush back. Open interest expands with price. Lows likely in. China vaults drained 73 tons today. 11 days at this pace until empty. 90% draw since 2020. Chinese buyers stacking into weakness. Long-term silver M2 chart shows retest of broken range, not reversal of bull trend. Price hasn't crossed 2011 high yet. Perspective over noise. Number 3. COMEX March. Crisis 21 days away. 429 million ounces open interest versus 103 million registered. February delivery rate 98%. January deliveries 49 million 7 times 2024. Drainage rate 785,000 per day. If March sees 50 to 70% delivery rate, 200 to 300 million demand versus 85 to 103 supply. Silver miners reporting earnings this month. Explosive cash flow from higher prices. Historical 3 times leverage to metal. Some up 1,500% in prior bull. Analysts will upgrade. Bloomberg notes banks don't have infinite balance sheets to trade metals. Structural limits matter. Here's the unresolved tension. Did we just see the low at 65 with 22% bounce confirming bottom? Or is this relief rally before Bitcoin completes 70% historical drawdown pattern, taking silver lower again? COMEX open interest lowest since 2018 says specs washed out. Lease rate 6.1% says physical tight. March delivery math says shortage. But Bitcoin correlation and historical bear market depth say more downside possible. Next 3 weeks determine if March delivery crisis forces repricing or if deleveraging continues. Data will tell us. Right now, structural tightness extreme, but technical confirmation still developing. Do your due diligence. Understand the risks. Bitcoin may have more downside per historical patterns. Volatility likely continues, but COMEX registered 103 million, exposure 429 million, March 3 weeks out. China 11 days from empty vaults at current drain, lease 6.1%, backwardation ongoing, 22% bounce from 65, risk on returning, know your time frame, silver just rocketed 22% from the grave, Bitcoin reclaimed 70,000, 1 trillion added to stocks in 2 hours. But in 21 days, COMEX faces 429 million ounces of demand with only 103 million ounces of supply. China's draining 73 tons per day. 11 days until empty at this pace. Lease rates at 6.1% screaming shortage. But Bitcoin's 70% historical drawdown pattern suggests 38,000 possible. Here's the question that will determine everything. What happens on February 27th, first notice day for March delivery, when the demands start hitting and COMEX has to choose between delivering metal they don't have or changing the rules mid-game? What happens when China's vaults hit zero and Western markets realize the East just absorbed 30% of annual global supply in one correction? What happens when silver miners report 1,200% profit increases and analysts are forced to upgrade? And what happens if Bitcoin crashes to 38,000 first, taking silver with it before the physical shortage forces the reset? That answer is coming in 21 days. The 22% bounce says the bottom might be in. The 6.1% lease rate says physical is disappearing. The COMEX math says default is possible. But the Bitcoin pattern says more pain could come first. One of these forces will win. Data will tell us which one. Watch March 1st. Watch the drainage rate. Watch Bitcoin's 38,000 level. Because the next 3 weeks will separate the people who understand market structure from the people who just chase green candles. Invest with logic, not hype. Make decisions based on analysis, not emotion. Subscribe to the channel to get the latest update on silver. This is OG John signing off.